السلام عليكم ورحمة الله. مساكم الله بالخير جميعا. Thank you all for coming and attending our first webinar. We have a very good number registered for the webinar, so that's why we're waiting for a couple of minutes for people to join. And I'm seeing the number increasing, so we'll probably start. But before we start, I wanted to thank everybody who showed up tonight. We're very excited to speak to you about what Jada is and what we look for and why do we exist in the first place. This will be, I'd like for this webinar to be interactive, so we'll leave much room for questions and answers. And I'll start before we take questions from the audience about a few questions that we get frequently. So we answer the first question, I mean the big picture questions, and leave the rest of the webinar for your further question, if you may like. So the first question that comes to mind is why Jada exists and why was Jada established by the Public Investment Fund. And before we get into that big question, I'll answer also another question that I always get, which is what Jada means. And it's Jada, it's not Jada, it's not Jida, and it's not Juda, and it's not Jiddan. So Jada in Arabic means rain or widespread rain. And this is what we want at Jada to represent. And I'll explain to you what our mandate, and you will be able to link that mandate to the name. But it is pronounced Jada, and I hope everybody does use that pronunciation. So Jada was established by the Public Investment Fund for a reason. That reason is to help and support a sector like many other sectors that PIF is looking after. PIF, as part of its mandate, or one of its mandates, is to help enable underdeveloped sectors, and under that umbrella there is a sector called sector development portfolio, and within that there are a number of companies that operate in different sectors. Jada operates in the SME sectors, and that is a sector that is up and coming, promises to have great impact on the transformation of the country, promises to be a major part of the Vision 2030, which is one of its main objectives is to try to empower private sector and move the development and the growth of the economy from the government, which was previously in control, to the hands of the private sector, because that will ensure sustainability, it will ensure growth, sustainable growth without dependence on oil. And it will also ensure a greater creation of employment, because in every other country or in every other economy, employment comes in larger number and in bigger impact and in higher quality in private sector, and in particular in the SME sector. So this is why PIF thought of creating a company that catered to development and enablement of the sector. So we looked at how do we develop the sector, how do we help develop the sector, and the choice was to go and do a fund-of-fund structure. And a fund-of-fund structure means that we as a company, we as a a vehicle for investing in SMEs. We don't go out and invest in companies directly, but rather we invest in funds, and those funds invest in SME companies. And why did we choose that route? Is simple. Development of private companies in every developed economy, and especially in the SME sectors, have always been done great and with a bigger impact if it was done by professional asset manager. SMEs, or private companies, and SMEs in particular, they do need equity financing, and this is one of the problems that we're trying to solve. But to be honest with you, this is not only the problem, and it's probably not the biggest problem to be solved. Equity financing alone does not solve the problem for SMEs. And there have been different experiments of providing financing to SMEs and or other companies, and that alone did not produce the outcome that we in a great impact that we're looking for. SMEs do need financing, but they do need more than that. I mean, SMEs usually are startup or companies that are trying to grow, and in addition to needing capital, they need much more, including strategic help and advisory and support, in help and support in business development, help and support in recruitment, help and support in financial restructuring, help and support in M&A activity. All of these services that usually are done only by professional, dedicated asset managers. And hence why we decided to go to the route of a fund of fund. Now, in any developed markets, we've seen the development of private industry and private equities is as good as development of the investment management industry. And if you look at Saudi today and the region as a whole, and because we wanted to depend on this investment management industry to help and support the SMEs, what you found out is private equity investment management industry, and in particular in private equity and venture capital, it's at infant stage. The experience that have been accumulated is not, we haven't seen a lot of funds structured, and unfortunately, even the few private equity that came out of the region, unfortunately were either did not do well or did well, but then hit by scandals like the unfortunate example of Abraj. So then we looked at this stage, and because we wanted to help SMEs through investing through fund managers, then our mandate actually changed a little bit from directly helping SMEs to trying to empower and create an investment industry. So this has become the mandate of Jada, or the mandate of the fund of fund. Now, then our direction has changed a little bit, because we wanted to see not only the problems of the SMEs, but more importantly, the problems of behind creating an industry, which is the investment management industry. And if you look at that industry, and it didn't, and as I said, it's still early stage of development, and there are not too many funds and fund managers and operating, and especially in the SME sector. We try to find out what are the problems behind not creating that industry, what are the issues and barriers that prevented this industry from developing. And we found out symptoms for this problem. One of those symptoms was, and a very important one was, that funds are not able to fundraise in the region because there is a lack of trust between investment manager and investor base. We have seen, I mean, this country and region is not short of liquidity. We have a lot of investors who are looking to invest in different asset classes, and in particular in private equity and venture capital. And we have people who, whether institutional clients or family offices or high net worth clients, are interested and have appetite to invest in private equity and venture, but they do it outside the region. But when it comes to the region, they tend to do it directly. They tend to do it. They don't trust investment manager, but they do it directly. And we try to find out why. And you find a lot of issues with the fund industry, and these issues we try to find solution for, and this is what we exist for today. One of these issues, and the main issue that we find that the industry lack and creates this lack of trust between the investor and the investment manager is talent. Private equity and venture capital is a long-term partnership. It's not a short-term transactional fund management. A fund is usually 10 years or even more. So it's based on a partnership mode, and the investor needs to trust the investment manager. And usually it's actually done in what's called a GP-LP structure, which is a partnership. So in order for me as an investor to trust my partner, which is the GP, I need to trust that those people behind the fund, working for the fund, have the right talent, have the right capability. They're able to execute on the strategy that they set out themselves to. And that is not, I mean, we've seen some of the cases in the funds that in the region, lack of talent is a major issue. And we try to focus on making sure that the fund that we invest in have the right talent. Then we looked at other things beyond this. One of the other issues that we find out is a big problem that we that does create this lack of trust is there's a misalignment of interests between the investor and the investment manager. As I said, the private equity and venture capital is a partnership, and for partners to work together towards a shared goal and objective, there has to be an alignment of interest, and that alignment of interest is usually achieved through the fund economics. And if you look at the fund economics in the region, or before we look at the fund economics in the region, let's look at best practices outside the region. Usually fund economics is geared towards creating this alignment of interest. GPs or fund managers will work well for the interest of the fund or for the investors if their interests are aligned. If investor can make can be successful and make a lot of money, then the GP and the fund manager will do the same. If they fail to do so, then they will also be penalized and not get the reward that they should get. That kind of fund economics that gears towards alignment of interest is we don't see much of it in the region, and that's something we focus a lot on. Unlike a private equity fund or a venture capital fund, is different from any other type of funds. It's, as I said, it's some sort of a partnership. A fund is similar to a company formation than a fund formation. So the management fee that is paid usually to the fund manager or to is should actually cover the cost of running that partnership. It's not a form of income generating for the people who are, make that fund. Unlike liquid markets or fixed income or real estates that are usually run by sponsor firms uh, and so there you can make money by through the management fee because that's usually the only source of income. For in private equity and venture capital, fees are there to hire the right talent and to pay them for their running expenses and running expenses for the fund. But where you make money is really at the back end where you make money for the investors. And only then you can make alignment of interest between the fund manager and the investors. And only then you can guarantee to get the trust or solve that this issue of lack of trust between funds and fund investors. Another issue behind lack of trust is terms and structure of funds. And we've seen different number of terms and structures in local funds, and these usually are investment management friendly. They are not LP friendly, not investor friendly. They're not structured properly in like best practices outside or in developed economies and developed markets. And we make sure that in discussing with fund manager that we invest with, that they try to, as much as we can within the permitted laws and regulation, that we benchmark ourselves to best practices. These best practices ensure different things and ultimately ensure creating of trust between the investor and the investment manager, and as such able to fund or solve this fundraising issue, which is we don't want to first. Its lack of trust is an issue that we want to go over, but it goes beyond this. It goes beyond just the investment stage. It goes even beyond after approval and after committing to a fund. We've seen great funding, successful funds, but then they're able to raise, they're able to invest, but then they get into scandals and misconducts and we think that if you're able to structure the right terms and the right structure and the right mechanism to interfere for investor to interfere when there is a need to interfere, then those misconducts could be stopped, could be dealt, even if, could be stopped before they happen. If they happen, could be dealt with before they become even bigger. And this is what we try to ensure in terms and structure that we negotiate. All of this for the purpose of creating or increasing this trust between the investor and the investment manager. The main question, I go back before I'll open the floor to questions. Why do we try to focus on help closing this trust gap? The impact that Jada looks for and PIF as a whole and within the vision 2030 is really big enough that it goes beyond the Jada capital. It goes beyond even all institutional capital that is done or invested in the sector. The impact that we want to create on GDP growth, on employment, creating employment opportunities is really big, and Jada alone and even other institutional investors' capital is not enough. We want to attract every real into investing into the asset. this asset class, because we believe it provides great investment opportunity and great investment returns, and it has great impact on the country and its own people. We want to private capital to trust investment managers so they can invest next to us. And that private capital is not only from Saudi and the region. We want to attract foreign private capital, whether it's institutions or family offices or different kind of investors. Only then the size of the market will grow to a size enough to create the impact that we are creating. And one more question just before we open the floor is, and this is a very frequent question that we get, is whether Jeddah has an investment mandate or a commercial mandate or a developmental mandate. And the simple answer is we are commercially driven. We invest in this asset class because we want to generate adequate financial returns, because we are part of the public investment fund, and the public investment fund is entrusted with the wealth of the country, the wealth of its people, this generation and the generation to come. So we have a fiduciary duty to make sure that we grow this wealth and generate the required rate of return on this wealth for the future of this country. Now, because where does the developmental aspect comes from? It comes from because we're operating within an underdeveloped sector. Because we are usually the first investor or the anchor investor, because we have a duty to set the right standard, because we have a duty to have to help and support first-time managers. This is where the developmental aspect comes from. But when we invest for financial return, and we expect the fund manager that we invest with to have the financial return as their main goal, because only then the sustainability of the developmental aspect will be guaranteed. I hope I answered some of the frequent questions, and now we'll open the floor to your questions. And thank you very much. We have many questions that have been asked, and I'll try to answer a few of them. So there are a few questions on the process of Jeddah. I alluded to it in my introduction, but we look at in investing with funds, we look at 4 criteria when investing in a fund. The first criteria is team. The first thing we look at is the people behind the fund that we look at. People, this is a people business. Investing or investment management is based on people. So this is the most important aspect. And when we looked at people, we don't look at one person, and we never invest with one person. We invest with a team that they have the knowledge, the expertise, maybe not the track record of investment, but they have the knowledge, the expertise, the trustworthiness. And that's the sort of due diligence we do on what they did in the past, not necessarily within a fund structure, maybe within a family office, within a large conglomerate, with another fund, or maybe within a fund. But this is the first thing we look at. The second thing we look at is the strategy. We want a coherent strategy that fits with the expertise that those people or team are equipped with. We invest in different strategy, but we have some constraints. There are too many main constraints that define our strategy. The first constraint is we, naturally, by our mandate, we primarily invest in Saudi. And so we only invest in funds that focus their investment strategy on Saudi. And when we say Saudi, we define Saudi by a homegrown Saudi company, or a company that started somewhere else, but are coming to Saudi, employing a lot of people in Saudi and doing a lot of business and operation in Saudi. So it doesn't have to be Saudi headquartered, but have majority of its business and employment and operation in Saudi. So this is the first constraint. The second constraint that we look at is size of companies. We focus on SMEs, and so we don't invest in funds that invest in large companies. We focus on companies that invest primarily or are within the 200 million of revenues and 250s of employees. But this is a general description. Apart from this, we are sector agnostics, we are stage agnostics, but we would like to invest in investment opportunities that, because they are Saudi and that's within our mandate, and because they are mainly SMEs, we usually expect the sectors to be in line with the transformation of the country, to be in line or to benefit from the sectors that are benefiting from the vision, because naturally those sectors will provide the best investment opportunities. So on top of, as I said, teams and then strategy, we also look at track record, if it exists. It doesn't have to exist, and we do invest, and this is a very important note to say, we do invest in first-time managers. We do invest with emerging managers that have not launched a fund before. They might have invested in different capacity or with different funds, but they don't have to have a fund, or they have not invested before. And actually, part of our mandate is to grow the pie of investment management. Today, there are a handful of private equity and venture capital firms in Saudi or operating in Saudi. We'd like to grow this to probably hundreds of investment firms, hoping that they will be employing thousands of investment professionals, male and female. Those should be investing with tens of thousands of companies and startup and SMEs in Saudi. And as I said, the impact that we want to create is big, and that's why we make sure that we make sure that the fund structured properly. The fourth thing that, in addition to team, strategy, track record, is terms and structure. And I spoke about it before, but we spend a lot of time, and this is where we spend, so our process is clear, and we'd like to make it very clear to everybody, actually in advance of people applying to us. But where we spend most of the time is on terms and structures. We'd like to benchmark the terms of funds and partnership that we are investing in to the best practice and to the best structured fund in any other developed country. And we spend a lot of time with investment with GPs negotiating on that. And if you ask any of the fund that we invested with, how was the process? Sometimes our process is lengthy because we negotiate heavily. And to be honest with you, those negotiations that we do are seldom to the sole benefit of Jada. We take it on our shoulder on that we act on behalf of others. We are usually the first investor. We are usually the anchor investor in these funds. We'd like others to follow and private capital, whether from the region or from outside, to follow. And only if we make the funds and terms attractive enough to other investors will follow. So as I said, we negotiate a lot on making the terms and the structure are as much as investor friendly and as much as geared toward aligning the interests of the investor and investment managers. And speaking of the experience that we've done, I'd like to, and I've seen it, someone has asked about this, what we've done so far. We're fairly a new company. We only started about a year and a half ago. Most of the team has joined in the second half of 2019, or some of them are joining now. But we've been very active. We've so far have invested with 8 funds. On top of those 8 funds, we have approved another 8 so far, and those 8 are in final legal due diligence and closing. So this brings the number of funds to 16. We are currently in due diligence, or actually in our pipeline, we have about 25 funds on top of the 16 that we either closed or approved but yet to close. And we've looked, on top of this, we've looked at even larger number of funds. And we're not shy to reject funds. We've rejected about 15 funds. And those 15 funds that we've rejected are funds that we assessed. So these are not funds that came to us and we found out they don't fit the strategy. Those funds we don't even count. There are a lot of funds that don't fit with the strategy, and it's clear that they don't fit with our strategy, so we don't even entertain them. But there are funds that we looked at and assessed and rejected is about 15 funds. So, and this brings me to the selection criteria. And in private equity and venture capital, you need to be very selective. Private equity, if you look at the average, and this is probably on developed market, and I hope if we do the right thing in Saudi and the region right from the beginning, we hope to get to a better outcome. But in developed market, private equity on the median, on the average, funds do not generate attractive returns in relation or relative to the risk taken and relative to other asset classes. So if you invest in public equities, on real assets, on a risk-adjusted return, on average, private equity does not give you a better return. It gives you a better return than other asset classes only when you invest with first quartile managers. So it is, in private equity, is very important to be selective. And this is why we want to be selective. One, because, as I said before, we want to set the right standard, attract the other LPs and other investors, increase the trust, but also to generate the financial return that are in line with the risk we take and attractive enough relative to other asset classes. So I hope I answered that question. As I said, we've been very active this year. We're in terms of number, we're on target to close about on a close about of above 1 billion of commitment this year, and hopefully this will even accelerate in the future. One question I'm getting here is whether we invest in single asset funds or not. And this is a very important question to answer. And to be honest with you, most of the private equity, or what's called private equity funds in Saudi, have been single assets. To us, we don't consider single assets as part of our mandate. The reason why we don't consider that is private equity single asset funds do not provide the support that we think a private equity should do. We're not looking. A private equity single assets is a financial, is a structure, is a vehicle that is I could describe it as a private placement done in a private fund structure, but it's not private equity in the sense that we see developed private equity market is. When we invest in private equity, we don't expect from the fund manager to help on financial restructuring only or corporate governance only. I mean, financial help and support and governance, to be honest with you, could be provided by investment bankers, could be provided by advisors and consultants. We expect much more from an investment manager. And an investment manager would be able to help when he invests in a diversified pool of assets. He can help differently. He could diversify the risk by investing in multiple investments. He could provide different help and support to different companies. And this is where we think the impact that private equity could provide on SMEs specifically. Single assets are great, but they don't come within our mandate. I'm trying to look at, there are a lot of questions, so, all right. There's a question about whether we invest in Saudi-only funds or funds that are regional in nature. To be honest with you, we focus on the ultimate investment. As long as the investments are predominantly in Saudi SMEs, we'll be investing in that fund, whether it is a Saudi fund based or a regional fund based. And again, we have a definition of a Saudi companies, as I explained before. It is it covers both Saudi headquartered companies, but it also covers companies with a significant operation and employment in Saudi also. Okay. So I'm trying to look at a number of questions here. There are questions about size of the funds and what kind of funds do we have a target fund size that we look at. To be honest with you, the fund size is a function of mostly the team behind or operating the fund and the strategy that is the chosen strategy for the fund. There is no ideal target size fund, but as I said, the most important factor behind sizing a fund is being able to hire the best team to run that fund. So, and and management fee is, as I said before, is supposed to cover the expenses of running a fund, and the majority of the expenses of running a fund usually goes to the people behind running the. So actually, as long as the fund size times the management fee percentage ratio provides a dollar amount or a real amount that covers the expense of running a fund, I think that's the right size of the fund. Obviously, also another factor, a secondary factor behind deciding on the factor or the size of the fund is the strategy of the fund. Obviously, if you're investing in earlier stage, probably a smaller size surface. If you invest in private equity, probably a bigger size would be required. But again, the size of the fund is predominantly, as I said, a function of the team behind or running the fund. There's a question about whether we like certain sectors. As I said, we're sector agnostics and stage agnostic, and we invest in both venture and private equity. In terms of an asset allocation point of view, we will be investing in private equity more than venture, for the reason being usually investment amounts in private equity and growth capital is bigger than early stage. The expected return that we think, and this is even from developed market, private equity usually generate higher returns on average. Plus, I mean, again, it's risk adjusted, and again, also impact on GDP growth, on employment, on the other developmental aspect. It also apparent more in growth capital than early stage. So we will be, as I said, we will be investing in private equity more than venture. Venture is in what we've seen so far is dominant. I mean, technology dominant. So technology definitely is a sector that we have invested in and we continue to invest in. But as I said, we invest in all kinds of sectors as long as the investment strategy and the investment in the sector generate the right investment returns, and it has to be, it's the responsibility is on the fund manager to pitch and to convince us that an investment strategy in a certain sector is worthwhile, and they have the right team that fits the execution of that strategy to achieve the required outcome. On private equity in particular, we don't focus on late stage because it's beyond SMEs, but more importantly, we focus on growth capital that generate or has an impact also. It both on return on developmental impact, and this is usually happening on an early stage in growth capital. It's not it happens less on leveraged buyout or large buyout. So we focus on growth capital when it comes to private equity. All right. So in terms of the process and how long does it take, to be honest with you, it really depends on the fund. We'd like to be upfront about our process, And to be fair, also our process has been evolving. And as I said, we're new. I mean, we're only less than 2 years in existence. So maybe we were not as upfront in the beginning, but now we're trying to be as upfront and honest with our funds, and we try to explain to them what we look for. And this is the webinar that we're hosting today is part of a way to smooth the process. We want everybody to understand what we look for and what we like and what we don't like and what we don't look for. We don't want to waste people's time. We'd like people to come ready and they know exactly what we look for, and to get at it and discuss how do we work together. In terms of structuring, we have worked on preferred terms. So even before someone launches a fund or try to structure the funds, we would be upfront with them on what do we look for, what are the sorts of things that we will accept, and what are the sort of things that we won't accept. So when they structure their funds, they know in advance, and that will definitely save them on time and efforts, on legal fees, on all of other things. And this is, and again, part of the developmental objective that we have on the sector, on development, on enablement of the sector. There are a few things that we do to help enable the sector, and hopefully those things, the outcome of those initiatives that we do will also smooth the process, will also help funds do things faster and more successful. One of them is this webinar that we're doing, and we intend to do periodic webinar that we will focus our topics in the beginning on us, but then we'll expand it to talk about the sector and how to develop the sector, and we'll be doing different things, whether virtually or hopefully when COVID-19 disappears. And I try to not to mention it, but I mention it because I think we need to do the right thing under all circumstances and under all without looking. I mean, I think there are great things ahead of us, and we look at things positively, and that's why I wanted to look at positive things. But in the future, hopefully, we'll host some of these periodic events, maybe at a smaller, in smaller settings in our offices. In addition to this, we're doing a lot of other initiatives. One of them we concluded last week, which is what we call EMP, which is an Emerging Manager Program. An Emerging Manager Program is a training program that we hosted for 35 participants, where we focused the material not on the technical side of investment. We know that a lot of investors or investment managers are probably more equipped with investment management skills or managing investment more than us, and they probably don't need that. We focused our training programs on fund management business, on how to create a fund, how to manage a fund, and how to raise a fund, and how to structure a fund. And these are the sort of things that are new to this region, especially at best practices. And I'm glad the feedback that we got from the participant was phenomenal. It was great. It makes us really proud of what we did, and we're very excited to do more of these initiatives. And we'll be running similar foundation EMP programs, but similar to the one we just ran. And please engage us. Please anybody who's interested, we're open and we'd like to invite everybody to attend these courses, and these trainings are fully sponsored by Jada. And in addition to that, we'll be running in-depth courses in different aspects, and we want to cover specific topics that we the industry thinks are worth covering. So this training is going to be ongoing. On top of training, we would like to do coaching and advisory for especially for new manager, for first-time manager, and we will be and we'll be investing with a lot of first-time managers. On top of this, we intend to create a program called GP in a Box. A GP in a Box is geared toward someone who heard about us, maybe attended a training course that we ran, found that this is something interesting. They probably have never managed a fund before, or they managed a fund but within a bigger firm, or they've been an industry expert and a different industry expert that they think they can provide value in terms of setting up a new fund. So GP in a Box is all about helping to seed a fund manager. How, if I think me as an individual, a couple of individuals that they want to set up a fund, what is needed to, it's hand holding in terms of documentation, in terms of process, logistics, templates, legal templates. We want to democratize the process of launching a fund and make it easy to people, and create, probably deal with this barrier that people are afraid to cross to this world of investment management, because at the end of the day, as I said, we want to create hundreds of investments of GPs and investment managers that operate in the kingdom, and hopefully a big portion of them will be successful, and that we will be investing with them not only in the first time, but also in the second and third funds and future funds to come. The process is as good as it is as the fund, how the fund is ready. If the fund ticks all the boxes, meets all the requirements that I talked about, we're probably we can approve a fund and invest in a fund fairly quickly. But to be honest with you, most of the funds that we're speaking with, because most of them are first-time manager, that process takes a bit of time, but it's because it's exploring our requirements. It takes a lot of training and awareness and to understand the requirements and to understand the terms and structure that we look for and negotiate those. But hopefully that process, there is also a learning curve for us and for the funds that we operate with. So we expect that process to squeeze even further as we invest more funds and as people understand our requirements. So I'm mindful of the time. We have few minutes left, but I'm going to try to answer a few other questions that they have. Okay, there are questions about due diligence and risk, and our risk process and management is an ongoing process. We spend a lot of time, as I said in the beginning, to approve a fund, to make sure that the fund is structured the right thing. But it doesn't stop at that. It's actually just start at that. We and the funds that we invest with will be very close to the funds that we invest with. We will be running an operational due diligence, an ongoing operational due diligence on each of the funds that we invest with, because we want to make sure that they do continue to do the right thing. If there are issues, we need to correct them before they become even bigger. If the strategy or the team or the risk taken or is not in line with the fund objectives and strategy, we need to have an honest discussion and feedback with fund manager to understand how did I see, and we're dynamic. We're not going to say that whatever. I mean, investment strategy. I mean, we live in a changing world, and investment changes, and if the investment manager is responding to market changes, we need to understand those market changes, and we need to understand the impact on the strategy, on the change in the strategy, and we're open to that as long as it fits with the team. It fits with the strategy that the team is taking over. I mean, there are a lot of questions about regulations and VAT. I'm conscious of the time. This is a very large topic, and maybe I won't serve the topic well if I talk about it in a minute. But in general, on regulation, we'd like to develop this market as best practice. We'd like to attract, structure the funds properly, and we'd like to attract capital from everywhere in the world. Unless we have comparable funds terms, and the funds are structured at as I said, best practice as any other developed market, we won't be able to achieve that objective. Our regulations need to cope with those best practices. CMA thankfully has been great at developing and improving the regulations of fund regulations, and they continue to do that. And but we're very ambitious. We also have a duty, and the fund manager also have a duty to engage in a constructive feedback and discussion with all the stakeholders, and whether policymakers or other players in the ecosystem, to continue to develop the terms, the structure, the regulations. That's one of the mandates that we have. But I'm happy to say that there are a lot of stakeholders that are very active, very interested in developing the sector. They see the impact, and they're acting on that, and they're developing the infrastructure to build this ecosystem. We're still starting this, and we're very far from reaching to the level that we aspire to. But the journey has started, and hopefully it's not going to be a long journey before we see the fruit of that journey. We're over time, but let me see if we have other questions that we have in front of me. So advice on new funds. As I said, we will be running special programs and initiative cater toward that. The Emerging Manager Program is something we have started, and we'll continue to offer. The GP in a Box is going to be launched soon, and there are other initiatives that we're going to do, and to develop the whole ecosystem. and please reach out to us, and the whole team will be very excited to help and support starting the journey of a successful and long-term successful investment management. And it's also, I mean, the industry will be as good as the people behind it. And if I can just end with a positive note, that we're very excited to see engagement from a lot of people. We've seen a lot of enthusiastic individuals that wants to manage investments and invest in this thriving, or yet to be hopefully thriving ecosystem. And believe me, and I'm saying this honestly, we don't have shortage of talent. It's and Saudi in particular have developed in the last few years a lot in terms of developing the right talent. It's all about bringing the right talent to the right industry. This industry has in the past has not been able to attract the right talent, and we're trying to change that. This industry will be able to attract the right talent if it becomes rewarding. And when I say rewarding, not only financially, but financially will be very important. We think if the fund economics is structured properly, definitely a fund manager, a successful fund manager, will be rewarded properly, better than any other career. Talent in every sector, in every industry in Saudi will not find a better job that provide them with the best rewards than investment management. That's not only in terms of financial reward, but financial reward definitely. But even more importantly, it's this impact and doing things for yourself. Investment management is not a job. It's a business. It's a partnership. So investment managers do not work for others. They work for themselves. They are partners to the investors. That kind of job, that self-fulfillment, and that an investment management job provide on top of the reward, the financial reward that it could provide, a successful fund manager will never find a better job than being an investment manager. This is what we're trying to create, an industry with the right talent that there are there, but we are trying to bring them. We're trying to incentivize them to come to the industry. And if we're able to do this, the impact that those talented individuals, incentivized, talented individuals with aspiration to succeed, the impact on the companies that they invest in, and that the companies that they help and support, and the people that run those companies, is beyond any impact that any other industry could provide. This is what Jada is for. This is the legacy that we're trying to create, and only with your help and we'll be able to succeed in reaching to that conclusion. Thank you very much. Hopefully we'll see you in other webinar initiative that we will be running very soon, inshallah. I really appreciate your attendance and the great engagement and the question that we got. I'm sorry we were not be able to answer many of the questions that we got, but we hopefully will be able to answer them in future session. Thank you very much, and we'll see you very soon.